Good afternoon, good morning, good evening, everyone. It is 1:14 p.m. Eastern Standard Time on this 24th day of March, 2021. Happy Wednesday. Looking at Cardano here. Price-wise, action-wise, looking at this on the hourly chart. If we look at the prior swing high here on the 18th, we've just had a real continual drawdown lower since then, especially when you look at the 19th. It's just pretty much a straight-up drop. Ever since the 22nd, we've had developing here pretty standard looking bear flag formation. So watch for any drop below the 108 to 109 value area. I've kept up on the chart here something. I can't remember if I did this in an article or if I did this in an article. Yeah, that's right. Looking at the Elliott wave progression here and looking at this, 95 cent value area being a probable bounce zone. We're still above the cloud. The daily chart is below the Kijun Sen and the Tenkan Sen. That's not a strong sign. And then we also see that the lagging span, the black average, is back. Well, it's actually not a moving average. It's just, it's the black line over here. It is inside the candlesticks. And what I mean by that is, if you want to be clear, if you want a clear sign that something is bullish within the Ichimoku system, there's several things that you want to see, but probably the most evident one is when the lagging span is above the candlesticks, right here. So if we saw the lagging span above this current candlestick, if it was trading above the high there at 154, that would be a very, very bullish sign. Because when the lagging span is above the candles, it's something called open space, and it's really indicating that there's very little resistance. There's really nothing ahead stopping price, so it has a much easier time moving higher. When it's below the candlesticks, it's the opposite. It has a much better time moving lower. Of course, ideally, what you would see is if you're bullish, you would see price above the cloud and the lagging span above the candlesticks. So it's not going to take long for this to occur. We know how cryptocurrencies move and how Cardano moves. So if the lagging span does eventually move back above the candlesticks, that'll be bullish. I don't think you even have to use the wicks here. I've done this before in articles and in some of the videos, but just getting rid of the wicks. I mean, we're saying Cardano has to move up to 133, close at 133, and that'll put the lagging span above the candlesticks. Now, as we get into tomorrow, Thursday, and Friday, when we start to move into Saturday, Sunday, and then all of next week, the value of the level that the lagging span needs to be above goes down. So starting next week, we see that it gets lower and lower and lower. The threshold drops. So let's see, what is this? Tomorrow is Thursday, Friday, Saturday, Sunday, Monday, Tuesday. By next Tuesday, the lagging span has to trade above and stay above 117. And that will be a very bullish signal. Just looking at the daily chart, we see that there is, I don't know why I don't have the RSI on here. Let me add that real quick. But when we look at the RSI and the composite index is right here, there's really no divergence showing up at all. They're both very neutral. Okay. And the percent B is neutral. So we're saying that the Bollinger Bands are neutral. We're in what's known as a squeeze. Okay. So this is just literally a waiting game. We're going to wait for a break. The Ichimoku system lets us have a really clear idea of what our bias is. As long as we are above the cloud, we are still bullish. And so any clear breakout within the Ichimoku system, any clear move above Well, between now and next week, any close above 140 is going to be crazy bullish. Because we are very, very neutral here on the daily chart. We are flattening out pretty heavily. That is a sign of strength. Notice that a lot of the cryptocurrencies that have spiked up a lot over the last couple weeks, they are not doing the same thing Cardano is. Cardano is developing and maintaining a value area. It's developing a new floor as a support zone for when it starts to move higher, it'll come back down here and find support. That's what's happening. And if you're a long-term bull, this is exactly the kind of thing that you want to see happen. You don't want to see this volatility swinging lower. I mean, if you're a long-time bull, you wouldn't be upset if it dropped lower because you want to get in at cheaper prices. But we're seeing this consolidation occur. That is normal. It's healthy. Expect to continue. And until we see the breakout, it's just hold on to your butts. Thank you for watching. From all the Trade Exchange Rates UK TV, please don't forget to like and subscribe.